Right. Just when global politics seemed stable, a new storm began to brew on the horizon. Trump announced a 50% tariff on all EU goods, sending shockwaves through the global economy. Markets reacted like a cat discovering a cucumber, with stock tickers in panic. Investors scrambled to make sense of the sudden upheaval. This wasn't a minor blip, it was a red alert. Financial districts around the world buzzed with anxiety. The timing was impeccable, just before a G7 summit in June 2025. Leaders were caught off guard, scrambling to address the crisis. This isn't Trump's first rodeo with tariffs, but this sequel has a bigger budget for explosions. The stakes were higher, and the potential fallout more severe. The threat reignited fears of a global trade war, causing widespread uncertainty. Nations braced for impact, unsure of what would come next. Businesses now face the possibility of enormous new costs. The ripple effects could be felt across industries, from manufacturing to retail. The immediate aftermath was frantic phone calls and heavy sighs from finance ministers. Governments scrambled to formulate responses. The fabric of international trade felt another significant tug. Supply chains, already strained, faced new challenges. This wasn't just about numbers, it was about real-world consequences for jobs and economic stability. Workers and businesses alike braced for the impact. The message was clear: buckle up, because the ride was about to get incredibly bumpy. The global economy was on a roller coaster with no clear end in sight, and nobody enjoys unexpected turbulence, especially when it's deliberately manufactured. The world watched, waiting for the next move in this high-stakes game. Why the sudden escalation? A 50% tariff threat on the EU is extreme. U.S. Treasury Secretary Scott Bessent claims it's to light a fire under stalled trade talks. This aggressive posture is classic Trump, wielding economic might like a blunt instrument. Many suspect the U.S. might be bluffing, having backed down before when faced with domestic inflation. It's a high-stakes game of chicken, with entire economies at risk. The strategy aims to force concessions, believing America has been taken advantage of. This approach risks alienating allies and destabilizing the global economic order. The broader implications are immense, signaling a potential return to protectionist measures. If the U.S. throws its weight around aggressively, others might follow, leading to a tit-for-tat escalation. Trade wars have no real winners, only varying degrees of losers. It's a lesson history has taught us repeatedly, yet some seem determined to ignore. The EU, faced with a 50% tariff threat, did not roll over. Instead, they stood firm, showcasing their resilience and determination to protect their economic interests. Brussels called for respect and hinted at reinstating retaliatory measures. This was a clear message that the EU would not be bullied into submission. European tariffs on American goods could make items like Harley-Davidsons pricier, affecting not just businesses but also consumers on both sides of the Atlantic. Amidst the bluster, there were signs of back-channel maneuvering. Diplomats from both sides were seen engaging in discreet discussions, trying to find a middle ground. Reports suggested Trump extended the deadline for EU trade talks after a request from EU Chief Ursula von der Leyen. This move was seen as a temporary reprieve, giving both sides more time to negotiate. This extension suggests even bombastic threats can be followed by pragmatic pauses. It highlighted the complex nature of international trade negotiations. The negotiations have been a source of frustration, with talks hitting a wall. Both sides have their own set of demands and red lines, making compromise difficult. The EU sees the US move as an unnecessary provocation, preferring negotiated solutions. They believe that dialogue and mutual respect are the keys to resolving such disputes. The differing approaches highlight a fundamental clash in diplomatic styles. While the US often opts for a more aggressive stance, the EU leans towards diplomacy and negotiation. The EU's position is delicate, needing to protect member states' economies while maintaining a relationship with the US. Balancing these interests is a challenging task. The potential reinstatement of retaliatory tariffs signals a firm stance. It shows that the EU is ready to defend its interests if pushed too far. The coming weeks will determine if this escalates further or if cooler heads prevail. The world watches closely as these two economic giants navigate this complex situation. The IMF has issued stark warnings about the potential economic damage from revived trade tensions. They projected Trump's trade policies could reduce the UK economy's size by 0.3% by 2026. This translates to an £8.5 billion loss, a significant economic hit. The IMF's forecast was based on a US tariff baseline of 10%, much lower than the threatened 50%. If the 50% threat becomes reality, the damage could be far worse. The IMF attributes this to global trade tensions and persistent uncertainty. Slower economic activity in trading partners impacts jobs and livelihoods. The interconnectedness of the global economy means a trade spat can have far-reaching effects. The IMF's message is one of caution, pointing out that actions have consequences. An all-out tariff war could undermine the fragile global recovery. The IMF's pronouncements are taken seriously by governments and markets worldwide. The impact of tariff threats isn't spread evenly. Some sectors face a harder hit. Wine producers on both sides of the Atlantic are voicing displeasure. French vineyards could see their access to the US market severely hampered. American wine exporters facing retaliatory EU tariffs are nervous. The automotive sector is on high alert, with European car manufacturers facing cost increases. Agriculture is another vulnerable area, with farmers often on the front lines. A full-blown resumption of the transatlantic tariff war could trigger a global trade shock. This would disrupt supply chains, increase costs, and dampen economic growth. Businesses rely on predictable trade environments to plan and create jobs. Sudden sweeping tariff threats create chaos, delaying investments and reconsidering hiring. The human cost of trade wars is often overlooked but very real. This current flare-up is part of an ongoing saga of trade tensions that have been simmering for years. For a while, things seemed calm on the tariff front, with the US pausing its conflict with China, creating a temporary sense of relief in global markets. Key US allies, including the EU, slowed their trade negotiations with Washington, hoping for a more stable and predictable trade environment. The new escalation against the EU suggests a shift in US strategy, possibly aiming to leverage more favorable terms. The end of a prior 90-day pause in US-EU discussions led to this decision, marking a significant turning point in the ongoing trade saga. The history of these trade disputes involves accusations of unfair practices and imbalances, with both sides claiming to be at a disadvantage. The Trump administration has shown a willingness to use tariffs as a primary tool, often bypassing traditional diplomatic channels. This approach marks a departure from decades of consensus favoring multilateral agreements, which were designed to foster global cooperation. The re-emergence of aggressive tactics creates a sense of déjà vu, but with higher stakes, as the global economic landscape has dramatically changed. The global economy is more fragile now, with a pandemic, energy crises, and inflation adding layers of complexity to the situation. Adding a major trade war is like throwing petrol on a smoldering fire, potentially leading to widespread economic instability. The hope is that this is merely posturing, eventually giving way to sensible discussions and mutually beneficial agreements. Amidst transatlantic turmoil, the UK finds itself in a unique position. The IMF slightly upgraded its UK GDP growth forecast for 2025. This optimism is attributed to anticipated monetary easing and government infrastructure spending. The UK's post-Brexit trade landscape includes a new UK-US trade deal. This deal aims to mitigate the impact of Trump's tariffs, reducing barriers on key exports. It lowers tariffs on British cars exported to the US, benefiting the UK automotive industry. This agreement offers some insulation from the broader US-EU conflict. Chancellor Reeves highlighted the IMF's positive assessment of the UK's economic plans. However, the UK is still connected to the global economy. A major trade war between the US and the EU would have spillover effects. The IMF flagged risks to the UK's fiscal strategy, including market volatility and borrowing costs. The UK government is trying to chart a course through turbulent economic seas. Their strategy includes a UK-US trade deal to shield against Trump's tariffs. Securing preferential terms for key industries is a top priority. The government focuses on domestic economic policy to foster resilience and growth. The IMF praised Labour's plans to boost growth and productivity. The IMF suggested maintaining current fiscal rules and potential interest rate cuts. Despite efforts, significant challenges remain, including market volatility and borrowing costs. The UK faces long-term fiscal pressures, with a projected surge in public spending. Financing this without substantial tax hikes or tough spending decisions is a major hurdle. The immediate chaos of tariff threats is one thing. Long-term effects are another. Trade skirmishes can leave enduring scars, reshaping global supply chains. This process is costly and disruptive, raising prices for consumers. A sustained period of protectionism can erode trust between nations. It undermines the rules-based international trading system. Unilateral actions create a fragmented and unpredictable world. This makes it harder to address global challenges requiring cooperation. Trade wars have a chilling effect on investment, leading to lower productivity growth. The global economy thrives on confidence and stability, which trade wars undermine. The path chosen in the coming months will have lasting consequences. Will we see a de-escalation and return to dialogue, or further division? The decisions made by leaders will shape the future of global commerce. Let's hope they choose wisely, as the alternative is too daft to contemplate.